Alright guys, today we're going to be going over one of the best strategies in the whole market, and this is passive income. It is probably the least amount of work you have to put in to outperform the market. And when I say outperform the stock market, we're talking about an 8% annual return, which has been the average for SPY. I think that's including this last year, but I'm not 100% sure. Either way, SPY is down a lot, and this strategy, using it, you'd still be up and actually outperforming the market year over year by over 60%. This stock is a dividend stock where you're buying shares and you're being paid to hold it. So before I tell you the name of the stock, I just wanted to let you guys know that it is one of the most trusted dividend stocks, and it is so good and able to pay out a 12.5% dividend every single year because they are run by JP Morgan, which is buying tons and tons of top tier stocks that are paying top tier dividends, and those are then sold. They're selling calls on them, like I explained in the last video, which generates them passive income. So not only are they making money from their own dividends, and they're actually profitable on that, but they're turning around and selling calls so that even if those stocks are sold, they're selling at a gain, and they're paid a massive premium for selling those calls. So it's a very good way for both investors and JP Morgan to make money there, because although they are paying such a high dividend, they are still very profitable. So this ticker is JEPI, JP Morgan Premium Income, Equity Premium Income, sorry. And it is trading for $55 right now. It's actually pretty low on the 5-year chart, but it is like absolutely outperforming. Even though it's down 11% this year, it is outperforming tech stocks, car manufacturing stocks, just a lot of, well, of course, like lower end stocks right now are getting killed, like Peloton, but it is outperforming almost every stock. Just as this ETF, it's outperforming SPY, which is down I think 20% from its highs and 15% down on the year. So still outperforming all that, and that's not even counting the 12.5% dividend. Another cool feature is JEPI will pay the dividend every single month. It's not 12.5% every month, it's 12.5% a year, but it is still paid out every month, allowing you to take that money and then dollar cost average into the stock. So you're averaging in at either a better price or just more shares to get a larger dividend every month. And I did some calculations with $10,000 after 10 years of not adding any more money. So you're just putting in $10,000 today. You would be coming out with $24,000 in 10 years, which is great. That's a 140% gain, and that is not counting adding anything at all. Like you're not adding money you made from your job or maybe other income sources like real estate. You're not adding any of that. You're literally just holding it. So you're being paid another $14,000 just to hold it. That's 140% gain in a year and 10 years, like I said. So that is great. And if you were to then add maybe 30% of your income per year, then in 5 years you could easily hit that 500,000 to $1 million mark. That's still paying you dividends, and dividends, like, it's constant, still paying you. And if the price goes down of the stock, the dividend will actually increase. So they're getting still the same premiums, but they're able to load up on more shares, of course, and the dividend will go up to encourage more people to buy it. And as you guys can see, this is not a low volatility stock. We're still seeing movement. This is because many millions of people are invested in this stock. And there was this jump from SPY, which has been nice for any holders. We're now up 2%. But this is not a stock you buy for growth. Although it would have paid from the IPO to the spike, and even down here it's still up 8%. Even though it would have paid then in share amount, you're buying it for the dividend. So if the stock remains at $55, that's when you're making that extra 14K with 10K invested. If this were to go up, if we see another bull market, then you could potentially even double that in terms of share gains as well. So it's a really great investment all around. There's no downside because you're still investing in one of the most trusted stocks. It's basically like buying SPY, but it's paying you a lot for it. So I don't see anything wrong with it. It's got a super low expense ratio of, let's just check. Yeah, 0.35 expense ratio. So that's almost nothing. And actually, they increased their dividend just this month to 14%. So forget what I said before, that's a lot more. At that point, you're looking at almost double the market. And we can see their top holdings are all pretty, it's nothing to do with growth stocks, but like Hershey's, that's up 30% this year, and Pepsi is obviously a great hedge. Basically, everything here are really good investments long term. So they're doing a great job. I have personally many shares of JEPI, and I will always be buying more. Like I said, I think 30%, 10 to 30% per year of your income is great to go into just JEPI alone. And then I personally would put more into other stocks or just the market itself. So this is an amazing stock. 100% recommend to buy it. And yeah, that's pretty much it. It's my favorite dividend stock. So if you guys enjoyed this video and got some good information out of it, please like and subscribe. And we do have a Discord, which you can check out below in the description, which gives you access to what we are buying and selling. We also have live trading, so you guys can join us for that as well, get access to exactly what we're doing, exactly when we're doing it. So with that being said, thank you guys very much for watching, and have a great day.